There's currently a lot of problems right now in the housing market, starting with mortgage rates hitting 23-year highs, which is causing buyers to get cold feet and cancel contracts in droves. In addition, that rise in rates is also causing homebuyer sentiment to plunge, which is causing U.S. housing starts to hit 3-year lows. And if that wasn't enough, Fannie Mae is causing for the U.S. housing market to have the largest slowdown since 2011, while at the same time you have economists expecting home prices to continue to rise in 2024, saying that there simply aren't enough homes to meet buyer demand. And that's because the housing market is continuing to tighten as inventory hits historic lows, which in turn is causing millennials to feel like they missed the golden opportunity to buy a home. And with that, I realized that I'm actually part of the problem. No keyboard warriors, not because I'm a real estate agent out here talking about the housing market, telling people that home ownership is important, and because you believe I'm just trying to sell homes. No, that's not what I'm talking about at all. I'm part of the problem because I am a homeowner locked into a super low interest rate, but it's the right time for me in my life to buy another home. So I'm currently in the process dealing with what a lot of homeowners are actually dealing with right now in the housing market. They have a home that they currently own that has a super low interest rate because they bought years prior to the pandemic. They were able to refinance into super low rates, but now they've gotten to a position where they've somewhat outgrown that property and they need to move. But housing prices are significantly higher. Mortgage rates are significantly higher, causing me to pause as someone that needs to move and contemplate whether or not that's actually the right decision. So in today's video, I'm going to walk you through the process of what I am personally going through. We're going to talk about real numbers, what my mortgage is now, what I'd be going to, the idea of renting my home, how much money it would bring in, and why I'm actually part of the problem, because what happens here actually affects the housing market. It affects other buyers out there in the market. And it's one of the primary reasons that I personally believe that house prices are stable and aren't going to go much lower anytime soon. But before we do that, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. Also hit the subscribe button to stay updated on everything real estate related. So the Fed recently declined to hike rates, but did point to the idea that rates will stay higher for longer, in turn leaving rates unchanged for the moment. And while I personally believe the Fed should be done because the economy is showing signs of slowing, they're actually signaling that they're going to raise rates one more time before actually ending their hiking campaign. And while I do believe the Fed is going too far for too long, it's unknown at the moment whether or not they're going to continue to hike rates. But the idea of keeping them higher for longer is definitely what they're trying to drive into the market, because if the Fed comes out now and says that they're done hiking or that they're pausing, that would cause more spending out there in the economy, essentially counteracting everything that they've done so far. So my personal belief is that the Fed has to come out with this aggressive stance. They have to remain super hawkish. And that's exactly why you have Fed officials out there expressing support for keeping rates high. But here's the thing. We know that the economy is slowing. We got credit card debt hitting $1 trillion. We got the Atlanta Fed GDP showing that their GDP numbers are actually coming down from the crazy number that they were reporting just a couple of weeks ago. And on top of that, we have student loan repayments starting as of October 1st, which threatens to pull $100 billion out of consumer spending, which means less money out there going into the economy towards hospitality, towards travel, towards retail, towards all of the things that drive inflation up, and in turn goes back to making those student loan payments, which means the economy is likely going to continue to slow on its own without the Fed continuing to hike rates. But one of the other main measures that the Fed pays attention to outside of inflation is employment. And at the moment, the labor market remains tight, with U.S. jobless claims dropping to an 8-month low. But once we go into detail on the jobs numbers, we can see that after all the revisions that they do, that the job market is also slowing. It's just not slowing as fast as we would like to see. So whether it's 3 months from now, 6 months from now, 9 months from now, you're going to see the economy stall, which in my eyes leads to less aggressive Fed policy and more than likely lower interest rates. So I know a lot of you are out there listening to this going,
Jeb, all of those things you said are negative. So why exactly are you thinking of buying a house in this market?
Well, if you watch any of my videos in the past, one thing I always talk about is not trying to time the market, not trying to pick the top, not trying to pick the bottom, but rather buy when it's the right time in your life, which is going to take me back just a couple of seconds here and tell you about why I bought the property that I currently own now. I bought it in 2012. I happened to buy at the right time in the market. I paid $500,000 for the property, but put that aside. It was the right time because my wife and I had just gotten married. We just had our first child and we wanted more kids. So we wanted to move out of the apartment that we were in and find a nice community where we could raise a family, which in turn is exactly why we bought that house. Now, we've been in that home just over 10 years. In fact, this will be the 11th year that we've owned that property. And now things have changed in our lives. We no longer have one kid. We actually have 3 boys with the ages 11, 9, and 5. And guess what? They're not getting any smaller. They're continuing to grow. And our property as it currently sits is a 3-bedroom, 2.5-bath home. And over the better part of 2 years, we've actually been looking at other homes out there in the market, trying to find the right one. And there's this property in our neighborhood that we've eyed for a very, very long time. It's actually a friend of mine who owns the property. And I've always told him, if you're going to sell the property, reach out to me first because we want the opportunity to buy it. Well, lo and behold, last week he reached out to me saying that he's now looking to sell this home. But just like a lot of you, I'm out there looking at the housing market, looking at the price I'm going to pay for that property, looking at the mortgage rate, and in turn, looking at the monthly payment that's going to come off of that. Not only that, but my property taxes are going to nearly triple from where they currently are at the moment. So what I want to do is walk you through the scenario that my wife and I are currently going through at the moment to show you why it adds additional pressure to the housing market, why the housing market isn't likely to move down in any meaningful way anytime soon. So the very first thing I did once he called me is ask my wife, hey, is this something we want to consider? And her response is, absolutely, we want to consider it. So the very first thing I did was call my lender. And I said, hey, how much is it to pull $300,000 out of my current residence using a home equity line to use that as the down payment on this next home? Because the idea here is that I have a 2.99% interest rate on my current property, and I don't want to sell that home because of how low the interest rate is. In fact, if I were to just put that home on the market today, I could cash flow just over $2,000 per month from what my current mortgage payment is. So if I can keep that home and buy the next property, for me, that's the ideal situation. And I think a lot of people out there are likely thinking something similar because I can use that $2,000 that I'm getting on property A to help offset the payment on property B. And the problem with that for the housing market is I'm not putting a property on the market, but I'm taking one off. That's actually a net of -1 properties on the market, which only adds to the inventory problem. Now, let's say, for example, I decided to sell that home, but take one off the market. Well, then I'm putting one on, but taking one off, which again doesn't help the inventory problem because in that scenario, inventory doesn't continue to build. In fact, the only real way for inventory to build is for someone to put a home on the market and not need to buy something else. Maybe they own multiple properties. Maybe they're going to live in a retirement home. Maybe they're doing something different. They're moving out of state, which means inventory in one market is able to grow. But nevertheless, what I'm saying here is that this scenario adds additional problems to the housing market. But in the case of me reaching out to my lender to talk about pulling $300,000 out of my current home, he came back and said I'd be looking at an interest rate somewhere around 9.875% using a home equity line of credit. Now, the reason I'm not refinancing my entire property is because my current mortgage balance is in the $400,000 range at an interest rate of 2.99%. So by refinancing the entire mortgage at a higher rate, my blended rate is actually a lot higher. So by doing this, I keep my blended rate at somewhere around 5.5%. But here's the catch. $300,000 at 9.875% is a payment just over $2,600 per month, which in turn means I'd be upside down about $500 on my current residence by keeping it and renting it out. Now, the other option is I don't pull any equity out of my home. I sell other assets that I have, other equities I have out there in the stock market. I sell all of that, which in turn would cause me to have to pay taxes on that money, which I don't want to do. So for me, the best path either to pull money out of my current property or sell this property entirely and take those proceeds and move them to the new home. But while we're talking about those numbers, not only would I be losing $500 on my current home, the mortgage payment on that new property, because I'd just be putting $300,000 down, financing at a rate around 7% on a balance of $1.2 million, my payment would be over $10,000 per month, which is 3 times my current mortgage payment. Now, if that doesn't cause you to pause, then financially you're probably in a really good position. But for me, I look at that and go, I have a family of 3 kids, a wife who stays at home and takes care of the kids, so there's no income coming from that side. So me, I'm the only one in my family bringing in any money. And quite frankly, I don't want the stress or to put my family in a position where she might have to go back to work in order to make this happen. And as many of you know, I'm a real estate agent, right? I make commission on selling homes. And when the market is really good, commissions are really good. But at the moment, because of the number of transactions taking place are continuing to go down because of high rates, because of housing affordability, because of seasonality, there's less transactions out there happening in the market. And in turn, hits my bottom line. So in order for me to be fiscally responsible in this situation, doing the home equity line doesn't really make a lot of sense for me. So in turn, I'm now considering selling that home, taking that equity and moving it to my existing home. So if I were able to do that, I would sell my home for somewhere between $1.25 and $1.3 million, which in turn would net me somewhere between $800,000 and $850,000, depending on where it's sold, minus cost to sell, all of that stuff. So if I took that money and in turn put it all into the new property, I'd be financing somewhere between $750,000 and $850,000, because I would probably leave a little bit of money out just to do some things that we want to the property, etc. But here's the catch to that: because interest rates are sitting over 7%, my payment on that property, even doing that, would still be around $7,500 per month, which is more than double of where my current mortgage sits with everything included. Now, I know a lot of people are watching this video going, Jeb, I don't feel sorry for you. You own a home, you have a lot of equity in your property, you have the ability to do that. And I completely understand that. I'm not looking for sympathy in this video. What I'm trying to tell you is there's a lot of people in my position that have homes with super low rates that would consider buying something else, but for one, are looking out there at the available inventory going, I can't find what I'm looking for, which was me for the better part of 2 years, and also looking at their current mortgage payment going, I don't want to spend 2-3 times my current payment in order to buy that property. Therefore, those homes stay off the market. But as I've told you many times in other videos, I personally believe that interest rates are going to come down. So if I were to buy that current property today and that payment is sitting at $7,500 or so, as mortgage rates come back down, even into the mid 5% range, my payment would drop by more than $1,000 per month, which in turn means that upgrade isn't quite as crazy as it would be otherwise. But at the same time, as mortgage rates come down, that means all of those people that are sitting on the sidelines willing to make that move, now that move isn't quite as crazy, so it's something they would consider. So they might be willing to sell their home and take one off the market, or they might be willing to keep their home if they're in a financial position, if they have cash on the side, and be willing to buy that other home and use the money that they're making from their current home to offset that home. And that's exactly why I feel like I'm part of the problem out there in the market. There's a lot of people like me in similar positions that need to make a move because it's the right time in their life. And therefore, if prices did come down at all, if rates do come down at all, it makes that upgrade less crazy and something we're more willing to do, which in turn keeps inventory low and the housing market stabilized. But this is where I want to reach out to you. What would you do in my scenario? I'm actually curious out there on people's thoughts. Is it something you would even consider? Am I crazy for considering giving up that 2.99% to buy something else? Because there is another option in the scenario. I could do an addition on my property for less money and keep my current tax base, keep my current interest rate, but it wouldn't necessarily give us everything that we wanted. And while this property doesn't give us quite everything either, it checks most of the boxes. So as somebody that's been a real estate agent for nearly 20 years, the housing market is changing. And I firmly believe that the housing market that we knew for the better part of that 20 years as I was an agent is actually dead. And if you want to know why I believe that, do me a favor and check out this video here.